Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention. It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Okay, hi guys. Welcome to this first lesson on the PTP program. Now, for those of you guys who saw the introduction, it's really positive to see you guys here. And I know that in the introduction initially, I needed to be perfectly clear about what we're going to be doing here, because I do know a lot of people will come into stuff like this with the entirely wrong idea. So if you are looking at this more or less for the first time, then I would certainly implore you to look at my introduction first to this program so you can build sufficient basis and foundation in terms of what are you going to learn here, right? Now, today, we are going to delve into the very beginning of what one would learn if they're coming into trading and investment, right? What you need to know from an absolute beginner. So we're going to start from the very beginning in terms of what we need to know, in terms of what the definition is of financial trading, what to look for, what to avoid. We're going to start basically from the very beginning, because I think if you look at a lot of course programs, they don't even tell people. I mean, everyone starts with charts, which is, it's beyond my comprehension. Charts are really one part of trading and investing. What about the fundamentals governing the marketplace in general? How do people even know what to start trading? I mean, I see people, you look on social media and what you see is people come in and they say, oh, I saw this thing on TikTok, or I saw this thing on Twitter that says that you can make money trading options, for example. And then you'll get a lot of people just start trading options, and they might have a little success at first, and then they start losing a ton of money. It turns into a complete revenge trade where they just want to keep throwing money at it because they think, well, as long as I keep doing it consistently, it's going to work out. But they're missing like a core chunk of the market, and the circumstances that you should be trading options in is not very clear. And a lot of people come into it thinking that, well, I saw that guy doing it, and so I'm going to do it and I'm going to make money just like him. But what they don't often realize is that a lot of the things that you see on social media is fabricated, right? So people fabricate this stuff, they construct it to look a certain way so that you will be impressed, and ultimately you'd want to give them money to teach you how to do the same thing. So in a way, it's a strategic business model for a lot of those people, especially on social media. And again, a lot of you are going to probably be saying that, but no, I trust that guy. I've seen it. I met him at some expo events, and he looked like a quote unquote millionaire trader. But the reality is that if you do the maths and then you think, well, how much is that individual charging you in order to do this trading program that he's got you in? And then you think about how many people have your idea about that person and how much money they stand to make on a month-by-month basis. I can assure you that the way financial education is today, most people can make way more money selling you courses than they can make trading or investing. It's just the reality of it. I mean, if you're a really, really good trader, you could probably make 40, 50, 60%. If you're really lucky, even 100%. annually. Maybe not consistently, but you might be able to notch that in a single year. And you're probably a really good trader. And obviously, when you think about the way the world works, if you trade for a living, for example, you're going to have expenses, and that's minus the expenses you take into the trade. So from a realistic standpoint, sometimes it can be very difficult for you to be making a living purely from trading, which is what a lot of people desire to do. And as a consequence, you tend to find that it's not viable for these individuals to keep doing this over a consistent period of time, especially when they're not raising capital or they're not managing money, which is obviously one of the bigger ways that you can generate revenue for yourself, is if you decide to go into the money management world. And a lot of these people are not doing that. They're not managing money. And as a consequence, the only way to make up that capital deficit is by selling new courses. Right? So this is really, really, really important. So what you tend to find is that they're going to sell you into the thing that they feel will be most appealing to you based on your own objectives, which is you want to make a considerable amount of money from trading and investing. And you want to start also with a relatively small capital base, which is what makes things like options very attractive as well, is that low capital base. Now, I'm not saying any of this to say that you can't make money trading options, or options is not a good thing to trade. As you will discover through my program, I will teach you about derivatives, so you will understand the circumstances to use derivatives and how to use derivatives. Most people think that all they can ever do is buy call options on Tesla or Google or Apple, some of the more familiar companies, and they can pretty much buy 90-day call options or 120-day call options, and that's kind of what they think they can do. But what they don't realize is that the option world can be quite complex, and there are a lot of things you can do that can generate you steady income in the option world that they don't even know exist, right? And I can guarantee you that when we do get to that part of derivatives, some of the stuff I will teach you, you will never hear anywhere else. You will never even see it anywhere else, because it's not in the best interest of the people who say they're teaching you. It's not in their best interest to teach you these kind of things. But anyway, that will be a topic we will approach for another day. But what I'm trying to highlight here is the importance of starting from the beginning. Now, I don't care if you say you sat by this professional trader and they showed you X, Y, and Z, and you now make 500% a year in trading options, whatever. I don't care. If you are not profitable in your own heart right now, then you need to be listening to what I'm about to tell you, right? And it's down to each individual. If inside, I don't care what you show to the outside, but if inside you feel like this is not going well for you, you don't have to tell me, you don't have to email me, you don't have to do any of that stuff. You just need to listen to what I'm about to tell you. Now, of course, if you're completely new to trading, then you cannot believe how lucky you are. Because the timing of this is just perfect, because I believe coming into next year and probably subsequent years, in my opinion anyway, based on the way the world is going, in the next 5 years, it's going to be a very tough time for a lot of people. And if you don't have another skill set, and I can assure you when this time is tough, there are people who are going to make a lot of money. Even I anticipate that I'm going to make a lot of money in this period, right? My returns are going to go up, basically. That's what I'm saying. And that's because of the nature of what happens to markets when there is crises. Now, I don't think that crisis is going to be something that will last forever, but certainly in the next 5, maybe even 6 years, maybe even a decade, we are going to enter into a period where it's going to be very difficult for most people economically, in their work life, in just day to day, And this is irrespective of your job you do or the income level that you have. So this is an important skill set to acquire. So I believe wholeheartedly that in order to acquire this skill set, you need to start from the very beginning, right? So if you're a beginner and you've walked in here, then you are incredibly lucky, because I'm doing this with that view in mind that everything here is totally free. I'm going to give you a proper education in the markets, and I'm going to do it systematically. I'm going to break down everything. I'm going to leave no stone unturned, right? And it's all going to be provable, right? That's why in my introduction video, I've already put my credentials, right? So you know that I'm a profitable trader, and I've put it up there. I've put the proof there so that everyone can see. So you know that's the case. So I am more than qualified to be talking to you about what I'm talking to you about today, right? And I've put it up there for you, everyone to see, right? So going forward, as I continue to teach you what will be a lifelong skill set, I'm going to continue to back that up sufficiently with proof, visual proof, and I'm going to send you away. I'm going to give you some homework to go away and have a look at some of this stuff yourself, right? And then come to your own conclusion, because the only way to make this work for yourself also is to go back and review some of the things I'm going to show you. Do your own due diligence, right? Don't just listen to me. Don't just take everything I say at face value. Go and have a look at it. And, you know, if you find something different, then I implore you, come back, challenge me, say, no, actually, I disagree because I found this evidence. And, you know, don't talk to me if you don't have any evidence. If it's just that your grandfather was like in the, you know, the Chicago Board of Trade, or, you know, you have a brother who's like this multi-million oil trader, whatever, right? I don't care. I genuinely have like zero interest. In fact, the path I've walked, I know that for most people who've been, you know, I've had this one trick pony success in the market, most of them, it's just luck, right? They were in the right place at the right time, the right event, and it all just fell into place, right? And they were risking everything but the kitchen sink. So I really don't care, right? A lot of this business can revolve around luck. You know, as much as I could show you a trader that made 3 million in a day, right? But I also can tell you that that trader risked everything that day, and it was just pure luck, right? Equally, like I said, you could probably tell me something different, but the bottom line is I do not care. So if you're going to challenge my points, feel free. You know, send me evidence that is not anecdotal. All right, awesome stuff. So we're going to move into the meat of things. So what is financial trading? Boy, I don't even know where to start. Like, this is one of the most inflammatory topics or industries out there, between the people who say don't even do it to the people who say it's the best way forward. There's always an argument and a counter argument. But today we're going to talk about defining this so it's clear to you as a beginner what this really is. And of course, you're more than welcome to go look online, back some of this up in terms of, you know, perspectives. So the common sense definition is it's white collar gambling. You bet that something's going to go up or it's going to go down, right? You can only win or you can lose. That's the common sense definition. To some degree, there is a gamble here, right? Life's a gamble. Everything's a gamble, right? But there is a gamble here in this, that you have to put up risk capital in order to be profitable, right? That's it, right? And that risk capital is always going to be at risk. Hence it's called risk capital. Like, you put up money with a view that you're going to make money in the future. But it's no different, right? If you put up money, for example, to buy a dream home, right? You're risking that. However, you're of the mindset that maybe your home appreciates in value. You might want to sell it down the line, or even if it doesn't, you might be happy to live in it. So there's some utility, of course, but it's still a risk or a gamble if you, say, for example, you've acquired debt in order to do that. So typically your mortgage, for example, that's very high risk, right? You know, depending on country you live in, you know, it could be very high risk. So my perspective on the common sense definition is that everything's gamble. So whilst to some degree, the gambling element of markets, and you have to come to terms with this, it's just the reality. The gambling element of market is definitely there. That is why we have things like, you know, apps, for example, that do trading, because it's gamified, right? The idea is to be able to suck you in so that you can put all your money in this. And we'll talk about why this is so important to the industry, that people continuously keep losing money in their trading or investment life. We'll talk about that. But that's the point. The whole business has become gamified. So to a degree, the common sense definition is right. Now, what's the real definition of, which is what we need to come to? So it's the purchase or the sale of an asset with a view of making profit, right? So this could be anything. It could be stock, it could be a currency, cash, it could be something illiquid like real estate, or it could be derivatives like options and futures, right? Which is a different kind of trading, but we'll also talk about that. So the real definition is really that you're buying something with a view of selling it in the future. And then there are other complex things you can do. For example, you can borrow something, sell it, and then buy it back later if the price declines. But we're not going to talk about that yet, right? We're going to come to that. That's another topic. But that's to give you an example of some of the trading activity that happens around finance. Now, a lot of people think of the gambling element because not a lot of them are involved in maybe stock investment, like say, for example, in Europe. I'm generalizing here, but a lot more people gravitate to options and futures, right? And a lot of you, and again, don't take my word for it, go out there, go on your social media and see what the vast majority of people are pushing and talking about is option and futures. Now, option and futures are highly leveraged vehicles, and it can be perceived very easily like you're taking a really big gamble, because options, if you buy an option, they decay in value. So they lose value over time, because obviously options have set dates of expiry. So after those set dates, those option contracts are no longer, they don't have any worth because they're no longer valid, right? It's because they've expired. So because of that, you have a limited time by which you need to profit on these contracts before they become worthless. So it reduces, not only are they highly leveraged, but it reduces the chances that you're ever going to make money from these things, right? And that's another thing we're going to talk about, all right? You know, defining how we choose things, but that will come. Futures obviously is the ability to speculate on the future value largely of commodities. Now, they're futures in everything. They're index futures, you know, they're even futures on options, right? But, or rather options on futures. But we're not going to get into that yet, right? So futures are, again, highly leveraged vehicles, right? Because you're buying these contracts that allow you to hold a certain amount of a commodity. So, for example, you can buy a futures contract which entitles you to 1,000 barrels of oil, but you need to only put up 10% of the money, for example. So this is a leveraged vehicle. So if these things go the direction you're not expecting them to go, then what tends to happen is people tend to lose more than they can afford to lose. And that's the other element of trading and investing we'll talk about, which is the leverage side of the business, right? This causes a lot of problems. But then on the flip side, you'd hear about some of the older names, like let's take, for example, Warren Buffett. Everyone talks about Warren Buffett. He's a legendary investor, you know, started with $25,000, etc., etc. But when Warren Buffett started investing, he's primarily focused on investing in stocks, and stocks, whilst there is some leverage, it is nothing compared to what is in the options and futures market. So whilst, of course, options can relate to stocks, for example, and that's what people do, but we can't ignore the fact that they're leveraged. So it doesn't mean we're not supposed to trade them. It just means that they're highly leveraged vehicles, and we'll talk about that. And for those of you who don't know what leverage is, it just essentially means that they're vehicles where you don't have to put up the full cash to acquire them, right? So something is leveraged if you put down a small amount of money in order to get access to a large amount of the asset or capital, or what people call the notional value, right? So those investors got involved in things like stocks, right, which were not highly leveraged, in most cases not leveraged at all, and they started to slowly accumulate these assets. And over time, because of the inflationary effects in our economy, a lot of these companies not only made more money, because we know that inflation benefits businesses because they have pricing power. So as the money supply increases, right, businesses tend to capture that excess money supply. So that inflationary effect is reflected in the prices of goods and services, right? So because of that, stocks have a long bias. Okay, so they tend to rise over time because of our monetary policy. Not a lot of people get involved in cash, right? Because cash is a depreciative asset, right? And again, don't take my word for it. Let's take the British pound, which has lost 40% of its value since 2016, right? So think about that for a second, right? So over time, even though we've had spikes in the pound, at the highest point, the pound was $2 to the pound. Today, it is just above $1.25 to the pound. So relative, and we use the dollar as a benchmark because the dollar is the world's reserve currency. So everything is kind of compared to it in terms of what the value of your cash asset is, right? Or the value of what your currency is. So a lot of people don't get involved in this because if you calculate the rate of return, you can obviously sell short the pound. That means essentially you're long the dollar. But the rate of return on cash has been significantly lower when compared to the rate of return on stocks or leveraged assets, which normally are high risk, high reward because they're leveraged. Their rate of return is naturally going to be a lot higher because you're risking a lot more because you're in a leveraged position. So it really just appears that way, but in truth, you have to consider the risk side of the equation. So hopefully this is very clear that the trading is nothing, it's nothing special. We do it kind of every day, whether we're operating in the illiquid real estate markets where we buy something, we often can't sell it as fast as the liquid markets where we buy something like stocks, right? Obviously, arguably, real estate, for example, has other utility than just the rate of return, right? Because also you can sort of rent them out. You can do that for stocks as well, but the yield is much higher, if you rent out your property, for example. Whilst there are, parts of society are going to argue that it's just as bad that people lose money in real estate. Of course they do. But if you live in the UK, for example, we have a saying, safe as houses, right? So more people are going to be inclined to invest into things like real estate, with the view that they're going to be able to generate monthly yield and so on. Of course, we're not going to get into the maintenance stuff. This is not, of course, about real estate. But, again, all of this for me comes under the blanket word financial trading. They're not separated. So in the end, you're going to have to decide as a trader what asset you get into based on a lot of factors that we're also going to be able to talk about down the line. Okay, I think it's essential at this stage. We take a bit of a pause, maybe go have a coffee break, and then we will come back to continue the discussion. Okay, so I hope we had a good, ultimately, coffee break. So we're now going to come over to talking about who financial trading is for. Now, this is, for me anyway, I find this a very sort of interesting question because often I always say to people I know, maybe friends or family, and I will say, you guys should always invest, right? I don't think people should just sit on their money. I don't think people should use a large portion of their funds just to invest in, hard assets like real estate, for example. I think that everyone with a degree of capital should have a desire to want to preserve wealth. And the only way you can do that is if you invest longer term in assets to preserve your wealth, right? And this is actually a world apart from, say, trading per se, like intraday trading. And one of the things that you will find as you go through this program is that deciding whether you're going to be someone who looks for long-term investment opportunities, or someone who looks for day trading opportunities, or someone who even looks for more swing-based opportunities that might mean that you're buying in an asset and then selling it maybe a month or two later. Right, so it really, really depends on people's objectives. But the one thing I always say is that everyone should invest with a view of preserving wealth, which means that there are a couple of things we need to stay away from as traders. So for example, you'd want to stay away from excessive leverage, for example, because these things don't preserve your wealth. Actually, that's what's going to destroy it, is if you have a significant amount of money and then you borrow against it with a view that you're going to make supernormal returns, and then the market goes against you, say 20-25%, and then you're completely wiped out just because you've taken on too much leverage relative to the cash that you had available. So for me, it's important to make that distinction. And through the program, I'm going to talk about the distinction, and I'm going to teach you how to be an investor, right? What to look for, how to be a swing trader, which is primarily how I approach the market, and also how you can be an intraday trader, which is how I used to approach the market, but the principles are all the same. And that's important. The principles are the same. Now, the only significant difference there is if you're a long-term investor, your focus is not about what the market is doing today, it's what it's going to do in 10, 15 years time. But being very realistic now, I always say to people that actually it really depends on your life stage. If you're 20 years old, then you're better off being a long-term investor because you're in no hurry. You've got another 20 years before you even turn 40. However, if you're 40 years old or you're 50 years old, then you might not have another 20 years, right? So if you're long-term investing or you're new to investing and you're going to start now, it's not a bad idea to long-term invest. That's not what I'm saying. I'm saying that the older you are, the more you're going to feel like you don't have a lot of time. So why not take all the risk you can now, right? But again, wealth managers will tell you the opposite. It's just from my experience, what I see is older people, to me anyway, appear more risky than younger people. That's what I'm seeing now. Obviously, it's this particular point is purely anecdotal. It's just based on the traders I've come across. Whilst, of course, some people might disagree. Wealth managers will tell you that the older you are, the less riskier you should be. And that's absolutely true, because obviously if you've got a lot of wealth and then you destroy it, then it's a problem. But I think a lot of these ideas are centered around the fact that people engage a lot in the higher risk investments as opposed to ones that are lower risk and probably support their stage of life. So I always say someone who wants to preserve wealth should definitely be looking at financial trading of some kind. Someone who doesn't mind risk, right? So this flows into the maybe slightly younger people who feel like, well, I've got a lot of time, so I don't mind risking, my student loan or something, right? So again, because trading involves putting up risk capital to make a profit, as a trader, what you do a lot of the time is you assume risk that others don't want to take, right? And that's where the payoff is. So someone who doesn't mind risking should naturally gravitate to financial trading, because it gives you the opportunity to risk as much as you can in order to gain as much as you can. Now, I'm not saying that this is the dominant mindset you should come into investing, is to basically bet the farm. What I'm saying is that if you have a higher propensity for risk and you don't mind it, then this could be a very good pathway for you, because you're going to have the freedom to risk it a lot in order to gain a lot. Someone with capital who doesn't want to start a physical venture. Now, this is something I strongly believe in. Now, I always say to people, like, it's like, how many people do you know who started a business and they're highly successful? Now, again, a lot like trading, a lot of people who say they're successful, but you open up their accounts, you see a completely different story. Now, don't take my word for it, right? Just look at Elizabeth Holmes, I think it is, for Theranos as an example, right? Who convinced the world that she was a billionaire. She was in Forbes and everything else, and it was all a scam. But it didn't stop her, doing all these presentations, being everywhere, being looked at as a very reputable figure. And she's not the only one. There are many, many people who claim to be successful business people and it just turns out to be just bogus. And this is true even for large companies, even companies that are listed. You're going to find that some of these companies, despite, posted public accounts, often things can go wrong and their profitability can be over exaggerated. A good example was what happened with Tesco. And for those of you in the UK, you would know about that scandal. And if you don't know, you can just Google it online. I'm not going to get into it now. Obviously, this is a public forum, and in no way am I implying that Tesco is not a viable business. But what I'm saying is that even businesses that appear to be legitimate and viable often sometimes could not be that. So if you wanted to get into a physical venture, you have to appreciate that there is a lot of risk associated with that as well. And if you don't have the headspace or the ability to manage people, product lines, manufacturing in some cases, or you're not a personable enough person to offer or deliver a service, but you have a bit of capital and you want to get into business in some shape or form, then financial trading could be that thing for you, because obviously it allows you to be able to deploy your capital without having to deal with all the management aspects of companies. You just buy those companies and then you wait for them for their shares to appreciate in value. So in other words, you buy an equity stake in the business. Or it could be you prefer to invest or trade in commodities, right? So you might be into agricultural commodities. You might know a lot about this, maybe even worked in that industry, but now you've got capital and thinking, well, I'd rather buy those commodity futures on exchanges because I understand so much about it. And if there's maybe shortages, for example, it could push the price of that commodity up. So if you're very familiar with the cycles and you understand the commodity space, then you might feel like you're in a position to take advantage of that, right? So there are various reasons why you would effectively want to get involved in that space, for example. So if we just take a step back and then we think, so why would we want to get involved in financial trading? So again, one, we would, to some degree, we want to preserve wealth. Two, we don't mind taking the risk. Three, we might want to start a business, but just lack what it takes to get into business where you're managing everything. So we don't have management skills. Then this might be a good path, right? So I want people to think about this as well. So if you're watching this, and kudos if you're still here. I mean, I deliberately do this slowly so I can help increase your concentration span, because I think that people who have low attention to detail, low concentration spans, are going to struggle as traders. Trading requires long periods of concentrating and analyzing. And if you don't have that skill set, then you're probably going to struggle. It's best to be honest. I mean, if you're not an analytical person, I mean, you're going to find it very hard, getting in any kind of financial trading. So it's important to improve your attention span. So if you're still here, it essentially means that you're already sort of fitting that criteria of someone who's going to be successful, and this program is likely going to take you there because you're going to have the patience to sit through it all. And that's what it's going to take, because this is going to be a really big program. There's going to be tons and tons of lessons as we go down the line. It could take weeks, even months, for me to be able to impart all this knowledge. So if you're still here, then you're on the path to greatness. Now, the only thing that I ask is that if you're here and you're watching this and you're taking the time to go through this and you're enthusiastic about what is to come and you're already liking what you hear, then all I'm asking you to do is give the channel a shout out, share all over your socials, click the like button, subscribe, let other people know basically what's going on. That's it. I don't require anything else. So it's completely free. And as you go through this, you should be able to see that you're getting value. And if you're not getting value, then just leave, right? Because again, it makes no sense. If it's not making sense for you, it's not working for you, then you shouldn't be wasting your time here. But I believe the vast majority of people are going to benefit from this. Okay, so moving on. What do you need to get started? Now, people will tell you need like a ton of stuff. You got to get this, you got to get that, you got to do this, you got to get that, and all kinds of hocus pocus, whatever. Like, so friggin', they're going to tell you need a friggin' wicker basket. But the bottom line is that all you need is a good computer. You need one. You don't need multiple screens even. You're probably not at that level yet. You just need a computer that got decent memory, because trading applications are very memory intense. So like, for example, I use TWS. That would literally take up maybe 50-60% of my RAM. So you want to make sure you have good memory, right? So having a slight understanding of computers might be helpful. But just a good computer. These days, modern computers, modern laptops tend to be able to do that. If you have a Mac computer, then you probably have a decent amount of RAM anyway. A broker. You need an intermediary. This market is just about intermediaries, largely. Most people want to be an intermediary, from introducing brokers to regular brokers and so on. So you want a broker that gives you access to the market. Now, it is incredibly important what you choose as a broker, or who you choose. There are rules. When we get to that side of the whole thing, there are rules in terms of the brokers that you want to choose. And we'll talk about that. Because one, they're bad brokers who will cost you money. It will be your worst experience of your life, and I guarantee it. And you're going to walk away from this feeling used and abused, right? Especially CFD brokers. So and we'll talk about all of this, contracts for difference, right? CFDs is where a lot of people enter into this business, right? It's through CFDs. And those guys take no prisoners, right? It's cost over cost over cost, and it's just messy. If you're not experienced, you're going to struggle. So my thoughts are always, if you're going to go with a CFD broker, go with one that is so big that they literally do not care that you exist. And it probably guarantees that they're not messing with their ecosystem as much. They're probably highly solvent, because when you're with a CFD broker, they are your counterparty, and we'll talk about that. So there are a couple of names that I'll give you down the line. I have no affiliation with these guys. It's purely based on the fact that I have tried and tested them. I have probably had an account with almost every reasonable, legitimate broker out there to test their ecosystem. Some of them I've deposited money with and taken money out just to be able to see what their ecosystem is like, because we all love to play in CFDs. In the end, I settled on my broker, which you guys know from the introduction. That is my broker. And of course, I do have another broker that covers me with other stuff that I like to do on the exotic side of CFDs, right? But either way, right, and I repeat, either way, you're going to need to find, or you're going to have to work with a broker that is going to not mess with your trades, right? Important. So it's always a challenge picking, but I'm going to make it easier for you. And it's not, you don't have to go with those brokers. In fact, I really don't care. I don't get any incentives. So whatever you do is entirely up to you. But this side of it will make or break you. Just take my word for it. But you're going to need a broker. You're also going to need a practice account. Oh God, this is that topic. Most people don't believe in demo. They say, oh, you know what? Having a demo account is not the same as live, blah, 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 blah. Heard it all. These markets run off servers. These servers are very similar. In a practice account, the only reasonable difference that exists between a practice account and a live market account is the fact that the broker you're with is not tampering with the practice or demo accounts as much as they're tampering with the live accounts when it comes to the market making side, right? And we'll talk about this later. And that means that in a live trading environment, you're going to see more crazy stuff if the broker is not a legitimate player. If they are if they're an underhand player, there's going to be a problem. And that's what brings the idea that practice accounts don't work as well as live accounts, right? It's not the same environment. However, it will give you the skill set you require to get used to executing and be comfortable with your trades, but also allow you to backtest and test, right? So you need a practice account. Now, my recommendation for that would be tradingview.com. That's a platform that is both free and paid for. It is very popular. So again, I've got no benefit from mentioning them other than the fact that I use them to backtest. I use them as a practice feature if I'm looking at new ideas. So they are a decent way to practice and get to grips with things. And then lastly, you're going to need a journal. Right? And actually, before I get onto that, I got to tell you this. Do not use live funds unless you can see that you're profitable on a practice account. If you can't make money on a practice account that it isn't tampered with, has no slippage, literally it's the cleanest friggin' trade you're ever going to have, you can't make money on this, you're never going to make money on a live, right? So don't even waste your time, right? Don't listen to people who tell you, oh, it's the emotion. If you make money on a practice account, you're going to fail on a live. It's bollocks. If you have a system that you've built up on a practice account that you're confident in, and you've tried and tested it, there is no reason why you can't implement it on a live account. Absolutely none. Now, don't take my word for it. Go in your practice accounts, put positions on, see if you can be profitable on them, and then put a small amount in a live account, and then do the same thing, and then see if the results are any different, right? Or you can put a very small amount in a live account if you like, something so tiny that it's minuscule, and then do this replicating trades in a demo and just see what results you get. You do this yourself. Don't even listen to me, because I can tell you that there is literally no reason why you should be in a live account if you haven't been profitable on a practice account. It's just how I see it. Now, from a journal standpoint, which is the last one, is that you want a journal because you need to write down your observations. There are a lot of things that are going to happen in markets that you're probably not going to remember, but they are going to, these patterns of behavior are going to be the things that are going to stop you from second guessing and just understanding and believing what you see. If you don't do this in the beginning, I'm not saying you probably have to do this for the rest of your trading career. Some people do this for the rest of their career, and that is great. But I am appreciative of the fact that not everyone has that level of diligence. And if you're really good at what you do, you understand your system, why on earth do you need to write anything down? Right? That's just the honest question. I mean, if you've got a good answer to that, great, tell me. But to be honest, I can't think of any reason why I'd want to write down my trades when I've got a broker that keeps all the trade record and I can print off the trades. Why would I want to write them down? If I've already developed a system over a few years, no reason to do that. However, if I haven't and I'm new and I'm trying to understand the market, then journaling is definitely going to save your life. Because there's things you're going to see that you're not going to remember, but they keep occurring and they're going to help you sort of solidify your trading strategy and system because you've been writing stuff down, and it helps build your confidence. So definitely get a journal. Okay, so now let's come to what trading is not. God, this is the best one. It is not a get rich scheme. 100%, right? You're not getting rich starting a trading account with $5,000. Yeah, it's not going to happen. It is not going to happen. Now, there is a chance that, like it says, I mean, and again, don't take my word for it. I know some of you are saying that, but I know a guy, right? I saw a guy on YouTube and, you know, he turned 5,000 into $1 million and he had all the statements there, blah, 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 blah. I get it, right? There's always a guy. But let me tell you this, it's not going to happen for you. That guy will always be happening for that guy till that guy dies. He's always going to be turning 5,000 into $1 million. But for you, for some mysterious reason, it's not going to happen, right? Don't take my word for it. You just need to go on all the trading forums, Reddit and whatever, and see how many people are trying to turn 5,000 to $1 million. And they keep complaining that it's not working. You know, but again, I said, for me, it's not a get rich scheme. It might take months, years for you to become a successful investor, for you to realize any reasonable profit from it. Right. So let's take an example. Let's say you put $5,000 in Nvidia a couple of months ago. I mean, Nvidia went from about $115, $120 and then went to, you know, near enough $500 now. Right. So you put 5,000 in that. You made roughly about 4 or 5 times your money. That's 20 grand, right? You're not a millionaire yet, right? You still have to find the next big ticket. And that's providing you don't take that 20 grand and take 10 grand out and go on holiday. So I don't know about you, but that doesn't seem like there's a reasonable chance that you're going to be a millionaire or you're going to get rich from this. You're just going to make a bit of money and you're probably going to be able to do nice things with that money. You might even make enough cash, maybe even to pay off your mortgage or get a new house, but you're not going to be a millionaire, right? Not with 5,000. Now, on the flip side, if you came into this and you've got a spare 200 grand lying about, and you put that all in Nvidia, then of course you became a millionaire. Fantastic, right? But you know, your starting base was very different, and most people are not coming into this with 200 grand. I mean, I doubt if anyone watching this video right now has access to 200 grand. If you did, then I bet that in the next couple of months, this program is going to turn you into the latest millionaire that's going to be making videos everywhere, telling everybody that you made $1 million. Just remember to tell them that you watch the professional trader program here, and that is how you managed to generate that $1 million. Don't go and tell them that, oh, you know, I did this all by myself. It took years of studying, whatever, right? Don't do that. But if you do happen to have 200 grand lying on the side and you turn that into $1 million, please give us a shout out. But in any case, guys, it is not a get rich quick scheme. It is also not a scam or a Ponzi, which is what you hear most of the time when you mention financial markets, is people will say to you, is it not a scam? Do you mean crypto? Do you mean like trading in Bitcoin? Because now with the next generation, when you say financial markets, they say crypto, right? And, you know, yes, crypto is part of the financial ecosystem, and we will talk about some of it and how, if you want to get involved in this market, the best way to do it, so you don't end up like some of those people, is that I put my money into this coin that they told me on Coinbase and now I don't have any of it. It's all gone. Or someone swiped my wallet or some other stuff. Right? We'll show you the proper way and what you should look at, and none of these crazy coins that you see out there, that, you know, the pump and dump ones. Look, it's just a reinvention of the penny stock market. We all know how that went. So it is not a scam. It is not a Ponzi, right? Investing is the way a lot of people make their living. It's a productive way to use capital, especially in an inflationary environment. So the last thing I would say financial trading is a scam or Ponzi. It is not a scam or Ponzi. And if you're thinking that, then there's something wrong with you. There's genuinely something wrong with you, because yes, scams take place within that because there are a lot of people who are not that smart and they're trying to get into this and they don't know where to look. And there's a lot of stuff on social media and they got friends asking them to get involved in this, and it's just a mess, right? So there are scams within financial services, and like there is in any other industry. There's scams in hospitality, there's scams in real estate, there's scams everywhere, right? So I wouldn't say that the entire financial trading industry is a scam. What I would say is that you have to also be careful what you get into, right? Not because you hear crypto, the latest, Dash Me coin is out there, and then you're like, oh, we got to get in because someone told me this coin could 10x and they knew someone who 10x'd it. There's always that, right? It's because the people who make these things, they're incentivized to sell you this because no one else is going to buy their crap. So they need to find unsuspecting people to buy their crap, and it just happens to be you. So just avoid those things. And like I said, don't take my word for it. It's all over the place. You hear about the BitConnects, and you hear about the FTX exchanges. So we will show you how to do this properly. Right. So, I've got Bitcoin. How come I didn't get scammed by FTX? Right. Because there's certain rules that come with investing in general. If you observe them, you're not going to get caught up in any of this madness. But in any case, guys, that's why I'm here. That's why this program is here. Well, awesome stuff. I think that kind of draws us more or less to a close, really. So I hope you enjoyed this first part of the lesson. I wanted it to be a full introduction to markets. So I really wanted to talk about this, and I wanted to break it down step by step. So going away now, you at least know what financial trading is. You know what you need to get started. You know what to look out for, and I think I've cured some of the misconceptions we may have had about it, and hopefully that puts us in a better position now to get into some of the meat of the learning in terms of asset classes and so on. So on the next lesson, we will go a little deeper. Till then, thanks guys.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?